Corporate finance is a broad area of finance that discusses about the sources of funds and the application of funds and the strategic decisions that finance manager take to increase the value of stakeholders. When we say the sources of funds, that means from where a businessman can bring money. What are the sources available? What are the options available to raise funds? When we say the application, right? The application of funds. When we bring money into the business from various sources, how these funds have to be utilized. How these funds have to be allocated for optimum results. In business, every choice that a business makes has financial repercussions or consequences, and any decision which touches the finances of a business is all about corporate finance. Largely, all that a business does comes under the rulebook of corporate. Now, let's understand the goals of corporate finance. Why the corporate finance is, demanded so much, why it is growing to become a separated division in every corporate, why companies are having their own corporate finance divisions, why it is so important. Survival of the business is one of the most important goal of corporate finance. Corporate finance focuses more on the survival of the business rather focusing only on the profit maximization. Because when the business is able to survive during the tough conditions, the business will ensure it will take care of profits in the better conditions. And I think that is the reason why companies have been focusing more on survival even now during the COVID pandemic, the ongoing pandemic. The business firms, the corporates have been focusing more on survival than focusing more on profit. I think that is the reason the companies have been focusing on cutting costs, cutting expenditure, cutting the salaries, cutting the infrastructure cost, and cutting their employees, right? So they're focusing more on the survival. The corporate finance focuses more on the survival of the business rather focusing only on profit maximization. Beating competition is another important goal of corporate finance. Beating competition in the sense when a business is running, it is not running alone, right? So every business will have alternative, every business will have competitor. Every company will be having competition in terms of price, quality, quantity, market share, geographical market share, and in all other aspects. So beating the competition is another important goal of corporate finance. Maximizing sales, maximizing market share are the goals of corporate finance. Every company prefer to maximize sales, thereby maximize the market share. Every company wants to become number 1, 2, 3. They want to be ranked first in the market. So every company strives towards that, and corporate finance goal is one among corporate finance is focusing more on maximizing the market share. Minimizing the cost is another important goal of corporate finance. So every attempt of the business should be focused towards minimizing the cost, maximizing the results. Minimizing the cost, maximizing the value for the business. But everything ultimately boils down to maximizing the value of stakeholders. So that is the ultimate goal of corporate finance. So maximizing the value of stakeholders. When we say the stakeholder, who is the stakeholder? The stakeholder is the person or a group of persons who are interested directly or indirectly in the business, who have active or inactive roles in the business. They may be internal or external to the business. Who are the external people who are interested in the business, who are the external stakeholders to the business. They may be customers, they may be current customers or the past customers, or they may be the potential customers who are about to buy, about to become your customers. The suppliers, people who are actually supplying raw materials and other, the basics for manufacturing or services. They may be creditors, people who have given money to your business, the investors who are interested in the business, the tax authorities. The tax authorities are the people, the tax authorities will always be interested in business because they expect every business to pay tax according to the law of the land. The media continuously and closely monitors the functions and the operations of the business. The government agencies will also monitor the activities of business. So these are the external stakeholders to any business. Now, who are the internal stakeholders to the business? They may be shareholders, board of directors, employees, managers, auditors, or legal consultants or tax authorities.